Okay, week ending March 26, 2010. We're going to do something just a wee bit different. We're just going to do the just going to recap and skim across this. We're not going to do every single day. What we're going to do is we're going to take a look. As you can see, on Monday we made a few mistakes and took a couple of hits. Now the mistakes weren't that we shouldn't have been long. Yes, we should have been long. It's just the way we entered to go long was a mistake. We rebounded on the next day. Had some decent trades, picked up, didn't have any losses, had a couple of zeros, but we picked up pretty good. Then right back to the mistakes again. This time we were on the wrong side of the market, and it hit us pretty hard. Finished out the week, last 2 days, with a decent recovery, and a very nice recovery with the euro, something that we were able to catch in the charts that helped us to take advantage of the move. As you can see, overall the yen was not favorable with us, simply because we were still shorting, looking and going for ping-ponging the effect in this consolidated move. We got caught when it broke out, and then we were unable to get back in there to really make any headway to go along with the move. It just didn't fill us, and the franc hit us for 25 pips. We'll take a recap. We're going to take a look at the reason why this is not a good move to double dare. We're going to take a look at being on the wrong side of the trade, and then we're going to look at being on the right side of the trade. Okay, let's do that. Let's start out with the mistakes that we made with the Aussie and the pound at the beginning of the week by double daring our long as opposed to going to support. We double dared because we saw the transitional move and it was bottomed action. However, we ignored the fact that it was a squeeze the day before that fell to the bottom, and we were expecting to come to the top, which does not make it a double dare, so to speak, but simply to find your support. Plus the fact that the double dare entry of 91.40 put us in a position where our stopping around the 91.05 is right where the stops are for the double dare long. So, and those two things we made big errors in our entry. Our entry was wrong. Our bias was correct. Same thing happened with the pound. Exact same scenario. All right, and it cost us. Then on Wednesday, which would have been here, we were just on the wrong side of the trade. With the euro here, we were on our third Fibonacci day, thinking of a reversal of the move. However, and we also had a first full house, and it was a short to the bottom, and it was in a narrow range. We just were on the wrong side of that trade. And likewise, all the way across, we were just on the wrong side of the trade. What we failed to realize is that we had strong movement. Okay, this was just a strong movement to the downside, and it was going. The leader was the pound, which we were able to make a move on, and we actually got a signal with a squeeze, so we squeezed it and made some good money. That should have triggered something in our heads, but to be totally honest with you, Wednesday I made my entry sitting in a restaurant eating, and I hey, I wasn't really on my game. But nevertheless, we recovered the following 2 days. And let me show you right now. I just want to focus in on this euro and how we use the chart to really get that one pulled together. As you can see here, Friday we made a move to the upside. One thing that also confirmed taking that move to the upside just from natural selection, so to speak. We know that because of the movement to the downside, we were going to probably see some profit taking, some covering of the shorts, which helped push that up. But more importantly, we looked and we saw the retracement from this high to this low back to here, going into the extension levels. Let me show you the extensions. Here is the retracement This is the point at which we had the highs and the lows. There's extension number 1, extension number 2, extension number 3. This extension of 2.0 is basically saying that we have, if you reach this point, you have made a full 50-50 move, so to speak. As much distance as you had here, you got here. And that's a strong area to take support. And if you look at it, also you'll see that this greenish area, I drew in a value area from last year. You can see that it's a value area from this low here to these lows here, and look at how much price is in there day after day, until you have a moment and it goes here, and it's just a lot. It's not day after day, because this is a weekly chart we're looking at now. But week after week, you were in this price range. It's created a value area. Okay, so that helped us, and it's this two extension area is right near the bottom of it. So we looked at that and said, you know what, that's a good area to take a support, and we did at the 132.90, and it paid off. Okay, paid off very well. And we're not going to hold on to it forever, because we are in a downtrend, as you can see. But it was good for the reversal for Friday. And also in the quick view, if you look at the euro, yeah, we're on the euro there. Okay, yep, euro. Thursday, when we made the call to do the long, even though it was not a Fibonacci retracement day from the shorting, we had this exhausted C column. And as we know, the A column or the C column, if one of those numbers exceeds your maximum stop range by any good length, as it did here with 119, that's a sign of overextension. Okay, so we made the move to get a little bit underneath the low around the 132.90, went as low as 132.67. Good thing we had the signal at the 132.57 and the 58. We were able to stay up underneath there for our stop. It never made it, and we don't have the closes and the high lows and close from today, but we ended the day up, as you can see on the chart. I mean, it never even made it. That's a weekly chart. It never even made a move to the downside whatsoever from the open. It just went straight up. Okay, on that euro, and we made a good piece of money. So that's March 26, 2010, the week ending. We ended the week with, what was it, 610 pips. Even though we lost some money in the yen, we lost some money with the franc. Not a lot, but we had a midweek crisis. But we still ended up with 610 pips by simply sticking to the rules, following the quick view. If you would like to take advantage of it, by all means do. All you need is a quick view. Learn how to do your market analysis. And those are the two things that we worry about here at Forex University, is market analysis and how to use the quick view to enhance that and make it a little easier on ourselves. Get those levels coming in, knowing which way to go with them, so that even when you do make mistakes like this, it won't hurt you so bad in the long run. Alright, that'll do it for the week ending of March the 26th, 2010.